the official podcast of Window and Door Magazine and the National Glass Association. I'm Laurie Cowin, editor of Window and Door Magazine. We are recording this episode at GlassBuild America 2024 in Dallas in a glass-enclosed podcast studio with glass provided by Old Castle Building Envelope. Before we kick things off, I want to acknowledge our podcast studio sponsors, North American Specialty Laminators, Schott and Becca. Today I'm here with Chris Beard, Vice President of Building Products Research with John Burns Research and Consulting, where we're going to talk about the economy and the state of the fenestration products industry. So thank you for being here today, Chris. It's great to have you.
Thank you. My pleasure. It's great to be with you.
Thank you. So let's kick things right off. With the Fed's recent rate cut, I understand that JBRC views this as having more upsides than downsides. Can you expand upon that a bit and what you see?
Yeah, so the Fed recently announced a 50 basis point cut. Kind of the way we think about it's the worst kept secret in the world. We knew it was coming. At the end of last year, end of 2023, the Fed signaled potentially 3 rate cuts through this year. Inflation at the beginning of the year came in a little bit hotter than anticipated, and so the rate cuts were delayed until this past September. And what we've been seeing in the housing industry in general is kind of this pause. Everybody's kind of waiting to see when these rate cuts were going to transpire. And so a couple weeks ago, we got some good news with that 50 basis point cut. And we do expect that to slowly be a tailwind to housing and to the fenestration industry. One piece of example is when we look at the Mortgage Bank Association last week, released their numbers on mortgage refinance applications, and they were very significantly year over year. So it appears like those initial cuts that the Fed has signaled is transpiring into mortgage rate cuts, and we do anticipate that to be tailwind for the industry.
Absolutely. Now, macroeconomically, there are some big tailwinds for new construction. What about remodeling? What's the outlook for that?
So remodeling has kind of been in what we like to call a state of deferral. We do think that there's considerable tailwinds from remodeling. We do. Number one is the undersupply of housing that we have in the U.S. Also, the age of housing stock. When we think about the last housing boom in the early 2000s, those homes are now in what we call prime remodeling years. They're between 20 and 39 years old. And those homes are typically in line for big ticket remodeling projects, including whole home window replacements. But what we've been seeing is we saw a little bit of pull forward during COVID years when people were stuck at home. They obviously weren't spending their money on travel and leisure and hospitality, but they were investing in their homes. And so we do think that there is a pull forward. As interest rates started to increase in 2022, we saw that a slowing of big ticket R&R projects. It's kind of been persisting since that time. And so we say that the demand is there, but we are in a state of deferral. And so as interest rates come down, as home equity lines of credit interest rates come down, we do expect homeowners to tap into the huge amount of home equity that they have in their homes. And as mortgage rates are still higher, we don't anticipate a big wave of moving, but rather we think there's going to be a bigger wave of people remodeling their homes.
Sure. Yeah. And especially with so many people working at home right now, I think they notice both aesthetically and performance-wise if their windows and doors aren't performing as they want them to.
Absolutely. About 30% of people are still working from home, and that's remained relatively consistent over the past couple of years, and we do expect that trend to continue as well.
Sure. Now, demographically, there's also a huge influx of household formation, due in large part, to immigration, to people just forming households that are growing up and graduating from college, looking to start families. Is that also going to be affecting the fenestration and building products business?
Absolutely. So we think that there's a housing deficit right now as we're sitting here in September of 2024, about 1.5 million housing units. That's for sale and for rent. And one of the reasons is number one, boomers are aging in place. They're not giving up their homes. Millennial household formation, we've been talking about this for years, but we're finally starting to see it. But then, as you said, a big influx in immigration that we started to see over the past several years. We saw a big influx in 2023. Throughout the first 8 months of 2024, we've continued to see that too. And, the immigration, they need places to live, and so that they're going to require for sale homes as well as for rent. And so we think that the demographic tailwinds are just going to contribute to that housing deficit that we already have.
Great. Now, what's your medium to longer view of housing in general and of the industry? How long can we expect to ride this hopefully positive wave that we're on?
Yeah, so that's a good question. We like to think that we think that there's going to be positivity in housing, probably through 2030. So our forecast, we go out to 2027, and we're seeing both for new construction as well as for R&R. We're seeing growth, kind of mid-single digit growth through for the next 3 to 3 years is what we're officially forecasting. But that housing deficit we talked about, 1.5 million, that's going to take a while to eat that away. And we just don't see as strong a development that's going to be whittled away anytime soon. The demographics, like I spoke to, that's going to continue to be a factor. And so we do expect a mid-range, mid to longer term positive view on housing, just because of these fundamentals.
Sure. Absolutely. Now, John Burns Research and Consulting and Window and Door partnered on the Window and Door Industry Survey last year. Is it okay if we talk a little bit about that and some of the findings from there?
Absolutely, love to.
Okay. Now, one of the things I think that we've been following with some interest is the cost of labor and materials and how those are particular challenges for companies right now. How has that trended in the past year of research?
So I think what jumped out to us when we did the initial survey, which we unveiled 1 year ago at GlassBuild, the manufacturers were reporting 20% year-over-year labor costs. So labor cost inflation was up 20% year-over-year. Since that time, we've seen that moderate. So as the job market has cooled, I would say, the job market is not weak, but the job market has certainly cooled. The companies have been reporting that it's become easier to find and retain the talent that they've been looking for, both in manufacturing, but also in sales, marketing, production, installation, etc. We've really seen that that labor inflation piece of it come down. Where I think the last reading was low single digits, low mid single digits year over year, which is kind of a healthy environment. And we're seeing that in other industries too. Labor inflation is definitely coming down. From a material standpoint, we had significant supply chain issues, as we all remember, in 2021, 2022. That carried into backlogs into 2023. And now we're seeing relatively flat material inflation. Certainly there are risks. We've got a looming port strike on the East Coast that may transpire, it may not. And that's a risk. Transportation costs have certainly come down. But material costs, imports from Asia, but also domestically produced glass, aluminum, those costs have come down, and we're kind of in that low to mid-single digit range, which again is a healthy environment. Now, as demand does pick up next year, we'll be watching that pretty closely, and that's one of the things that our team does is we monitor supply chain for inherent risks and what that might do to pricing.
Wow. Well, what else should the fenestration industry be keeping an eye on?
I think what we're looking for is we're expecting continued strength in new construction. Especially the large production builders are taking share. They're able to do mortgage rate buy downs and get rates down to the 5% or even lower in some instances range. What we have been noticing for the past couple of years, and we do expect that to continue, is builders are having to solve for affordability. So building materials pricing has not come down, and I know the fenestration industry is very well aware of that. Prices for windows and doors have not come down after the significant spike that we saw over the past several years, and that's not expected to continue. We don't really want price deflation anyway. So builders are having to continue to solve for affordability, and that's translating into smaller home sizes, more simpler floor plans, which could impact the number of units that are installed in each home. So that's something that we're watching pretty closely. And then also, we're starting to see a little bit of trends with direct sets or fixed units, so unoperable window units. We're seeing more builders reporting using that just because homeowners not needing to operate their windows and always running their HVAC system 12 months of the year. So that's something we're also keeping our eye on.
Okay, interesting. Well, Chris, is there anything else that you wanted to bring up about the economy in general or building products or fenestration?
I think we're all cautiously optimistic heading into 2025. We think that we're going to have a multi-year tailwind into the fenestration industry for both new construction and repair and remodeling. And so once consumer confidence starts to increase, once the effect of interest rate cuts begins to take hold and consumers feel better about their own economic situation, we think that there's going to be a multi-year trend for upswings in the fenestration industry.
Absolutely. It's a good time to be here.
Absolutely.
Sure. Well, thank you so much, Chris, for being here this afternoon. And thank you again to our audience for tuning into WindowCast. And thank you to our GlassBuild podcast studio sponsors, North American Specialty Laminators, Schott and Vecca. And thank you to Old Castle Building Envelope for providing the glass for our on-site podcast studio.